A short squeeze or just another bull trap? This is what we're going to cover in today's show. You can see that there is a sea of green on the crypto bubbles chart over here, and a bunch of the coins are popping, which is kind of expected since we pretty much swept the range low. We're going to go through a whole bunch of things today, a couple of tweets that I found profound and interesting, and then I will dive into the actual price action. Very little has changed, so it will mostly be low time frame. So without further ado, let's get straight into the show. And what I wanted to look at was this tweet, which could potentially lead to something market moving, and it is from Sophia. She says that China just said it will hold a COVID press briefing at 3 p.m. Beijing time today, and markets are getting very excited. And then you can have a look over here at the offshore yuan, and it's come straight down over here. And this will be interesting. This could be a potential market moving event today, depending on what they say. I don't know if you guys know what's going on, but China's going crazy with the whole COVID thing again. And there's been a lot of pushback, of course, expected, since they're living in almost a dictatorship type of environment where they are locking people into their apartments. It's absolutely insane. So also that tying in with the upcoming economic events of this week. Let's have a look over here from Pentoshi. He says that right now, the Fed dot plot for the end of 2023 sits at 4.5 to 5%. And in essence, higher rates for longer. So far, we've seen rates hit peak velocity and in a very short time. What we haven't seen is its impact over time. And the whole dot plots thing was kind of what the Fed do at the end of each quarter. So we only get the updated dot plots at the end of this quarter. And it's essentially the different members of the Fed. They vote on whether what they think the future projection of the interest rates are going to be. And he says if the economy continues to function fine and markets, then there is no reason to change this or cut, as it would only stimulate inflation again. The only reason to cut is if you are forced to. So the markets crash or the economy crashes or unemployment is soaring, and unemployment rates are also going to be coming out, which will, of course, have an impact on this. But then when you look at this tweet over here, Fed's Bullard said that we will have to maintain sufficiently high rates throughout 2023 and 2024, which is pretty scary. That means that, well, they're implying that they're not even close to slowing down with their increase of interest rates over there. So something interesting to take note of. And then what I wanted to look at was from Trader XO. I really love his trading style. I think that out of all the so-called well-known traders, I'd describe my way of looking at the markets probably most similar to his. And he says, yeah, personal opinion, investing over the next several years will be challenging versus what the last decade of relaxed rates policy provided, of course, to investors. And he says, subsequently, I believe that we're likely to experience waves of volatility as growth, inflation, along with monetary and fiscal policy ebb and flow. So trading more than investing, basically saying that's going to be the better approach. And therefore, you should sharpen your skills as a trader. And I have mentioned this as an unpopular tweet that I made, but I said, well, what happens if the last decade was the decade of the bull and the next decade is the decade of the bear? I mean, what are you going to do? What if that is the case? Then the only way that you're going to survive that and especially flourish within that environment is if you can understand how to read these market cycles, and you take a disciplined approach, focused, disciplined approach, and you have an investment plan. Pretty much, you shouldn't be entering the majority of your money into a market unless that market is in an uptrend. I think that's the first and most important lesson over here. Yes, I've outlined my way of getting exposure into the market, but technically the only exposure that I would have is over the next 18 months is 25% through dollar cost averaging. And basically what that means is I'm betting that the market will bottom within the next 18 months. And I think that's a really decent approach to take and a safe approach to take, because what happens if the markets do downtrend for years? I mean, it's definitely a possibility. At least in my lifetime, this is the first time that we're going into a bear market for equities. The prior bear markets, the great financial crisis of 2008, was a V-shaped recovery. Price went straight down, and S&P 500 recovered very, very quickly. And now we're going down in this methodical approach. I will show you something interesting on the S&P 500 shortly when we go to the charts. Then another interesting unfolding event, which we covered yesterday on Run Show, if you didn't watch it, is BlockFi has now officially filed for Chapter 11, which is bankruptcy. And that is pretty scary. I mean, they were one of the biggest and considered to be one of the most secure. So definitely my heart goes out to any of you that were invested and in BlockFi, and you've now lost money, because it's going to be the same story as any of these bankruptcies. You're lucky if you get like 3 or 4 cents on the dollar by the end of things. And there you have it, cryptocurrency exchange. FTX reportedly asked local banks to put their money in the exchange for a respectable return. So there are ties here with FTX once again, and the contagion spread. Silvergate Capital is said to have lent money to BlockFi, so also going to be affected as one of their lenders, and the contagion just continues to spread. And I told you guys, watch this space, watch this story unfold. It's absolutely crazy. A lot is going to come from this, and the story is not yet over. So another thing that's happening because of this contagion spreading, you have Charles who says, yeah, there it is, hash ribbon miner capitulation confirmed, triggered by the $10 billion FTX fraud and subsequent collapse. Bitcoin miners are now going bust, and hash rate is trending down. And then you also have Dylan Leclerc, who says Bitcoin hash rate is starting to turn over here. Hash rate 7-day moving average is now 13.7% off of all-time highs. Mining difficulty is projected to adjust by minus 9% a week from now. Early stages of another minor capitulation by the looks of it. And I've outlined a lot about the different minor capitulations and price, and whether which one comes first, chicken or the egg approach. Typically speaking, sometimes it seems like the miners capitulate first and then price follows. Other times price capitulates and then the miners follow. So let's just watch the space over the next couple of weeks. This is probably going to flush out some of the price within the system as well. It's going to send things down further. And Will Clemente says we are potentially entering into a double dip minor capitulatory period. Hash ribbons have just initiated a bearish cross. Historically, this has been a leading indicator of minor capitulation. Whenever you look back what's happened in the past, whenever you've had those crosses, price comes down quite aggressively. So keep an eye out for that. There is a potential. And when you do look at how things line up with the stock market, it would make sense. At least everything price-wise is telling me that we're still waiting for that one more flush to the downside. And Dylan Leclerc shows you pain. These are all the different Bitcoin mining companies, and they have been quite heavily knocked. Pretty much every single one of them are currently down. But the great thing and the power of Bitcoin is that it's designed to re-incentivize them to come back in, because obviously you have the difficulty adjustment, which we can see is going to happen in about a week's time, and then certain miners will start to get competitive again and turn their machines back on, and then the hash rate goes back up, and hopefully the price does too eventually. So looking at the actual price of relevance is the monthly chart on Bitcoin. If you do look at this and you just say a chart is a chart, you can see I've outlined the key levels over there, and we have got very, very, very close to tagging that key monthly level, which is coming in at 13,957. And then the next key level is going to be 10,000. And then the following one is, of course, that diagonal line, the yellow one that's coming up, trending upwards. So keep an eye on this. I think at the very least, expect a tag of that zone over there. What about Ethereum? Ethereum has tagged its first level of interest, which was the $1,121. But the next one, which I think is also probable to get hit, is going to be 732. The question is, though, do we go up first and then down, or do we go straight down and then bounce from that level? Well, according to the Bitcoin volatility, you can see there's a little bit of push up within price has led to the lower band dropping back down, showing that volatility is once again contracting. And as mentioned yesterday, I'll definitely be waiting for this to trend completely up and finish its move somewhere around the 3 to 6 point mark. It's nowhere near fully expanded yet. and it's already suggested that expansion will most likely lead to price action going to the downside. So with that being said, though, we are seeing what you would typically find in the depth of the bear markets, those bottoming signals. And there's this whole tweet storm here from Max, and he says, number one, sentiment thread for the personal journal. And then you can look back at this journal in a couple of years' time, maybe when we're in a bull run, and you'll see that the signs were so obvious. So the Economist shows crypto's downfall. Then you have over here Miami nightclubs mourn the absence of high-rolling crypto entrepreneurs. And then you have number three, market actually concerned about the wrapped ETH depegging, which if you understand wrapped ETH, it should be a very, very low probability. I see someone deleted this tweet over here, but crypto is now broken and irrelevant. And then you have all the different tweets. I'm not going to go through all of them. I did retweet one of them, which looks like it may be the one that just got deleted. No, it was this one over here. I just retweeted this and I asked, what are your guys' thoughts? So it says, why crypto won't see another bull market again, by Mark Moss. It was a pretty interesting read. It's a long thread. If you do want to see that, go and have a look at my Twitter. But pretty much all the signs over there, this is the doom type of posting that you would expect when you're nearing a bottom. In the same way that when the market was nearing a top, everyone was calling for 100K to be inevitable. Then they rose their price levels to 250,000. Then 450,000, I think, was the most ambitious one for the end of 2021. And we're kind of seeing similar trends over here. So I just find that interesting. Another positive thing that we could be nearing a bottom is from this tweet from Unfolded: futures to spot volume ratio hits a multi-month low. And I told you what you want to look for when you find major market bottoms is extreme backwardation. So backwardation would be when the spot price is more expensive than what the futures price of an asset is. Then you go into backwardations. Typically, you want the futures price to be more expensive, right? And then another interesting thing, which I found, is from Gavin over here. He says, Warren Buffett is now outperforming Bitcoin over the last 5 years with his Berkshire Hathaway. So have a look at that. That is pretty hectic. And I mean, his curve is, it is uptrending, but it's almost flat. This takes many, many years for Warren Buffett style of investing to it's not the typical growth that us crypto degens go after. And now we have dipped below that. And it looks similar to, look over here, 2018, 2019, and 2020. We only remained under for small amounts of time. So call this a little bit of a deviation below. And then hopefully soon price will bounce back above and become overvalued like it was in 2021. And by now, you would hopefully have learned your lesson that in those hype cycles, hopefully after watching my show for such a long period of time, you have all the tools necessary to know how to identify when these moments come, and know that you should be offloading and selling into that so that you're well positioned for the next bear market to buy up near the bottom. With that being said, I also made a tweet today and I said that if you have made it this far, if you managed to take profits, you managed to sell, and you're now sitting with a whole lot of capital like I am near the market bottom, then the biggest mistake you can make right now is deploying too quickly. Don't deploy too quick. If things look extremely well valued, don't ape in bull market, in bear markets. When you have a lot of capital, you want to deploy into a good idea slowly. And in a bull run, when markets look like they're getting overhyped, you want to be able to exit very, very quickly. So that's a difference. Enter slowly in a bear market and exit very quickly, in a bull market. So how to find those levels? Well, we have outlined them. I think the most relevant chart right now is definitely going to be this one. It's a weekly chart, so it's not going to unfold that quick, but I'll revisit it whenever there is changes, and definitely stuck below the range high over here and looking for a tag at the very least of the mid-range. So mid-range or a deviation below for capitulation type of event. And we could be very, very close. So I know you guys are wanting to deploy capital because you're sitting on a lot of cash, but just remain patient. Deploy slowly is the message that I'm trying to give over here. Okay. DEXI bounced perfectly. It wicked directly into that 200-day moving average. I've been waiting for a super long time for this to happen, and there it's happened. It came close over here on the 15th of November, so about 2 weeks ago, but didn't happen. Now we've tagged it. Now the question is it going to bounce out of this level convincingly? And in order to do that, watch this zone over here, which is 107, 108. If the DEXI starts to get back above that level, then I would start to say that it looks like maybe a major bottom has been put in, and now it has a chance to bounce to higher levels. So that's one thing that I'm watching. Tying that in with the VIX, yesterday I told you guys, watch the VIX coming into this box, into the horizontal box on the daily chart over here, and have a look at that. As soon as it tagged it, it proceeded to bounce immediately by just over 10%. It went up almost 11% in one day. Now let's watch today. Let's see, is it going to have further upside momentum and, like the DEXI, continue to bounce from those key levels, or is it going to continue back down into a contraction phase? I'm not so sure yet. We need to wait, but do expect that something on the VIX, the volatility index, wait for an impulsive move. It's just a matter of time. It is inevitable. And when you do look over here at the S&P 500 futures, this is what I wanted to outline to you guys. So I don't want to create FUD or something by saying what I just said with regards to that unpopular opinion. Last decade could have been the decade of the bull, and what if this is the decade of the bear? I'm not really willing to go that far just yet. First, I want to see this level tag, the main target, which has been the main target for such a long period of time, and it's 3,200 to 3,400 on the S&P 500. And simply put, it's just a retest of the breakout zone for the S&P 500. So here you're going to have a whole lot of liquidity, and the markets are all a game of liquidity. This whole area over here should be retested. We haven't retested this area. It's also a strong horizontal. So that is, and I told you guys months ago when you first started watching this channel, that this is my first area of interest. My first and main area of interest is for this level to get hit, and then I start to become a buyer within the market. So currently where we at now is still within a downtrend. You can see it very, very clearly. Lower highs, lower highs, lower highs throughout, stuck below the 200-day moving average, which is currently rolling over. We have tagged it over here, the first rejection, second rejection, and now that looks like it's going to be the third rejection. So I'm currently running a short trade on the S&P 500. If you're wondering how I'm doing that, check out Prime XBT. Prime XBT do offer options whereby you can trade these different asset classes. So I thought this tweet was interesting from Michael J. Kramer. When you look at it from the perspective of what's happened since we tagged these levels above, so you're seeing kind of the same thing. So if you have a look over here, this level that you tagged, the 200-day moving average, and then it's coming into the downtrend, which is coming from back in August. And he shows over here, still looking a lot like the end of the August rally. And he's got here the FOMC minutes, OPEX, and Jerome Powell speaks. And again, OPEX, FOMC minutes, and then this candle that he's showing for this, I think this was posted yesterday. So for yesterday's candle, looks like, again, coming into that J Powell, which was this one on the left-hand side. And you can see that led to quite a big drawdown soon afterwards. So keep an eye on that. And he did say it's do or die for the S&P 500 2022 versus 2008 analog. Because if it doesn't reject from that zone and continue this path down, then the fractal will become irrelevant. So if the fractal is relevant, you want to be very cautious now, because you can see there is a lot of aggressive downside price action that could still be coming into play, which of course is why I am running the short on Prime XBT. Check them out below. If you do want to trade these different asset classes, then there is a link below. You can get up to $7,000 sign-up bonus. Just make sure that you physically have to type in that promo code Kyledoops and use this link below. Okay, price action on Bitcoin daily chart. So yesterday we spoke of whether this is in a descending triangle, which is this area over here, or whether it's going to break through the triangle and then go back into a range, which all roads lead to Rome, as they say. It's still the same thing. It would then just be some sort of a bear flag that still has a measured move down to low prices. So for now, pushing up against where the triangle would be, which also comes into those different exponential moving averages. The important ones that we look at is the 12, 24, and the 9 and 30 for EMA. So those are still angled down. Price is stuck below all of them. It continues to remain bearish, consolidating at the swing lows. Nothing has changed based off of yesterday. Wanted to quickly touch on this tweet. A couple of weeks ago, I outlined to you guys an opportunity to short the World Cup tokens. You would have absolutely banked it on this one. Chili's has retraced more than 50% from pre-World Cup highs. And then he says, yeah, fully scaled out of my shorts in this range now that the price has returned to levels prior to the forced narrative. So always kind of think of those things. I recommend you get a journal, right? So anytime that things are super hyped, like when Chili's and all these World Cup tokens were mega hyped, literally just mark it off on your calendar and then revisit it in 2 weeks' time. Look for short opportunities and revisit it in 2 weeks' time. And you'll see that most of the time the prices would have come down. So low time frames, 4-hour chart over here. Momentum oscillators are trending up, but you can see we're coming directly into that trend line. And price is currently rejecting from the 50-day, the 50 exponential moving average on the 4-hour chart. Let's see if it can get a close above. If it can break this trend line and get a close above, then there is a potential that we go back into the range, and then you target higher up towards that 200 exponential moving average. So is it a short squeeze or not? Well, if you look over here at the different aggregate charts over here for CVD spot, CVD futures, and coin margin futures over here, the only one that's currently trending up now is the stable coin margin, which is the USDC USDT pairs. The coin margin contracts are also downtrending following the reset, where they seem to be respecting and rejecting this trend line over here. So I'll be watching to see if price can break above these trend lines. Spot price is the main one that I look at, and it's been downtrending for quite a long time since the 12th of November. It's just been a straight downtrend. If spot can break through this level over here, as well as the aggregate futures prices also break through their trend lines, then I would say maybe the short squeeze has been initiated. For now, I would say it's just a little bit of a bounce. Now, what would that look like? That would probably match up with a break of this trend line as well. So very simply put, you can also just trade the price action. You break through this trend line, look at it, it's currently rejecting off that on the 2-hour chart, but get above this and you'll probably find that simultaneously these futures contracts and the aggregate CVD will also break through its trend line, and then you have a short squeeze. So why am I telling you this now? I'm telling you now because I don't want to tell you after it happens. I'm telling you early so you can keep an eye on these things. If you see a breakthrough this level, you target to mid-range, a clear above mid-range, and then you can go all the way back up to the range high. And what would that mean? That would mean that you wipe out all of the stops that have been placed for traders that have been shorting along this trend line over here. So every time we hit this trend line, people would have been adding to their shorts with their stops slightly above. And you can see we've been holding this trend line since the 13th of November, which also ironically matches up, of course, with this one over here, which is when spot has been downtrending ever since. So some useful tools over there for you. I hope they do help. Let me know in the comments what you think, if that makes sense, if that helps you. And then lastly, the trading competition, up to $2 million in prize pools over here that can be won. You trade in teams. I do have a team set up. It's called the OKX Bantarians. If you do wish to join us, all you need to do is click on the link below over here. There you go. You only need $100 to trade this one, unlike the BYBIT and Bitget ones, which are $250. And then lastly, also get your free Web3 wallet and NFT by filling in the form over here. You can mint it for free if this is already full. I'm not sure, they only take the first 50 people. I can't see how many have participated yet. So if you do wish to do that, Everything is below. All the links are below. Please do give the video a like. I would greatly appreciate it. And then hit the bell notification and subscribe to the channel. And that brings us to the end, guys. Trade well out there. Have fun. Stay safe. Don't deploy capital too quick. And keep your eyes on the hourly chart. So, no, I have not short squeezed you guys. I will see you guys all on the next video tomorrow. Cheers for now.